Hello, everybody. Welcome to Know Your Money. I'm Bronwyn Wayner.
And I'm Craig Finch, and we are from Growth Financial Planning. We hope you enjoy our podcast.
Hello, everybody. We have Sue from Anthurico Accountants here with us today, just to unpack a little bit about owning a business and knowing that that is separate from you. So thank you so much for being here, Sue.
My pleasure.
We have had a conversation about one of the things that you struggle with is that you find that people see their business as an extension of who they are. Do you want to maybe unpack that a little bit for us and explain how that is not good?
Okay. I think the biggest people need to understand is, when you register a company, you get like an ID number, basically, the registration number. You have an ID number. So it's two individual people. So it's like you and Craig, you're separate, you're not joined at the hip. And that's what people don't understand. So what they normally do is the money's in the bank account. So they don't want to take a salary because then they've got to pay SARS tax as a receivable. So they put the travel or whatever groceries, their bond accounts, whatever through the company accounts at the end of the day. And then when we get the bank statements and we start going through them, we've got to split this. And then all of a sudden, there's a loan account that's in debit. And that means you owe the money back to the company. And then they say, but why? How did that happen? But all these things are not business related. All expenses have to be, always tell yourself is, if I spend something, could I justify that it's in the production of income? That's always the biggest question. And the answer is like, well, maybe or no, then don't put it through the business.
So if you drove from your home to a client and you spend money on that petrol, that is in production of income, for example.
It is, but the SARS also deems from home to work is private.
Yeah. So if you drive from home to the client's home address or their business address, that's a business travel. That's deemed as a production of income.
Yes.
If you took a client for a coffee and a toasted sandwich or a lunch or whatever, that's a discussion over lunch.
Yes.
In the production of income.
Correct.
Okay.
In your experience, business owners, what are the biggest red flags for claiming expenses?
Groceries, bond account, entertainment, travel. School fees.
Yeah.
So if you do that, let's say the business owner did put that through, then this loan account you've just mentioned is the other way around. So does that mean that they've taken money out the business without paying tax on it?
Correct.
And they're trying to get a tax deduction for that. And SARS goes, no. You didn't loan the business money. You actually took the money out. So therefore you should pay tax on what you took out. Is that correct?
Yep. So when we do the company tax return, that debit will be listed as other loans. And then they ask for the financial statements. In the financial statements, you will see it says director's loan. So then the SARS will issue a dividend against that.
And you pay tax on that.
And they got to pay tax on it.
So the other loan account says that the business needs money to whatever expand, like Warren needs to put another studio in here. He takes money out of his own account and his partner, they put money into this business and then they can draw that money out one day, correct?
Yes. I think I would say is draw up an agreement between you and the company so that there is justification why the money came in. Okay. Because if SARS does audit the income, they could just say that they're going to add up all the income and there could be 400,000 you put in personally to meet expenses. So as long as you've got documentation to prove that that money went into the company belongs to you, then there won't be any issue as such.
So then Warren builds his studio and the business does well and 2 years later he can draw the money out.
Yes.
And he won't pay tax on that?
No.
Okay, so that's him or a business owner loaning the company money legitimately for a reason, the
Correct.
company using that money and then paying the loan back.
Does the company have to pay interest on the loan?
It depends on the length of the loan and the agreement. So if the company is like scraping odd ends and you trying to keep it alive, to add that interest on, you're just making the company in a worse situation than if...
because ultimately, SARS wants your company to succeed, right?
Yeah.
There's no financial interest for your company going under, for them.
Exactly.
So there's two types of loan accounts in summary, right? The one that you've lent money and the one that you've taken money out, and you
Yes.
should be paying tax on that.
Yeah.
And then that one where you take it out, when the tax season ends, that's when that dividends would
No, when
have
you
to
do
be
the tax
paid.
returns, they
When you
pick it
get-
up. And
Yes.
legally, what should happen is that should be converted to a salary, or you convert that to a dividend. So the company pays the dividend, and then that dividend gets set off against that loan you've taken. The problem is that if there's more than one person in the company as an owner, and then all the shareholders are supposed to get a dividend. So one person's taken 400 and the other one's taken nothing. Then when you draw the dividend, it may not be enough to cover that loan account.
How often can companies pay dividends?
Sorry?
How often in a financial year can companies pay
Normally
dividends?
once a year, because remember you need to declare to SARS, get approval before you make the payment.
Oh, so you have to get approval from SARS?
But you can pay bonuses.
You can pay
know.
bonuses.
Right.
Bonuses
okay,
and
okay.
dividends are two
Are
different
dividends
things.
a more tax-effective way of getting money out?
Not really, because you know, at the end of the day, you're going to pay 27% tax, because remember, dividends is after tax. So you're going to pay 27% on
After you've
your
already paid
profit,
corporate tax,
and
basically.
then 20% afterwards. So you've got 20 plus the 27. So you, at the end of the day, paying 47.
I only ask because a friend of mine, he owns a company in the UK, and it's much more efficient for him to do it with dividends there.
We've had this debate with hundreds of people, and the one lady from Mazars said, if what you are earning is over 1.8 million, which is the bottom of the tax table, that's at the 45%. Anything over that, a dividends is generally better, but by like 2%.
So you pay your salary up to the 1.8,
1.8, and then you take a dividend. But again, like what Sue's saying is, if there's more than one shareholder within a business, you have to pay dividends per shareholding. So say you know, there's someone owns 80 and the other person owns 20, and there's 100,000 to go out, only 20 would go to that one shareholder.
Understood, understood.
But you could get bigger bonus.
Yes,
And how are bonuses taxed? Just part of your personal income?
yes.
Straight like normal. Whatever you take as a salary gets
That's put your
calculated.
whatever you've earned during the year, and then...
So most people complain when they get their bonus, the tax is double.
What?
Because your tax table
Yeah.
goes higher.
higher.
You go into a higher tax bracket
Yeah.
generally.
and sorry.
No, go.
No, I'm just curious with because we're not at the size where we're VAT registered yet. How does that change everything for a business and doing tax returns and collecting money and etc.?
You collect that on the behalf of SARS and don't get paid for it, in summary.
So do you get reimbursed for the VAT you collected, or how does it work? How does it work?
You can, 90% of the time you end up paying SARS, because bear in mind, the general rule is you sell for 100 Rand and your cost is 80 Rand. So your profit is 20. So if you take the 80 and minus 100 on the VAT, you're going to always pay in. Your salaries is your biggest cost. There's no VAT claimable on that. So you'll find 99% of the time you will pay in. The only time you'd find you claiming money, for example, I have a construction company. So what they do is they develop the townhouses for that whole period of 2 years or whatever. In that time, they are, claiming for their buildings and their cement, their bricks, whatever. So they will claim for the first 2 years. Thereafter, when they've sold those units, they paid a massive amount in. But if you take the massive amount that they're paying in, it's less than what they've claimed over the 2-year period. But a general person, probably like yourself and Craig and us even, we always end up paying in.
Yeah, so basically, when that money comes in, let's say it's 115,000 Rand, just for ease of numbers, that 15,000 Rand you need to keep aside to pay in for VAT every single time. So often some companies kind of start using that as if it's their own money again.
Yeah,
like
and
this
then
is,
they have the VAT bill and they can't pay it.
and that's where the problem is. So
And is the VAT
it's
only
very
due at
much
the end of
about
the
staying
financial
in
year?
your lane.
No, it's
3
due.
months.
It depends. If your
6 times a
turnover
year.
is above 35 million, that's every month.
Yeah.
If it's less than that, it's every second month.
And what's the lower limit before you have to become VAT registered?
You've got to be have $1 million turnover
Yeah.
or 50,000 Rand over 3 months, and you can apply if you want. Because there are some people, like when they do import and exports, they have to have a tax number.
Right, okay. So
But
that would be the only reason at that level you would want to do it, right?
yes.
And what
It's an
happens if you
actually
don't
You want
Not
to
a-
avoid it, right?
Yeah, it's not the best solution because as Bronwyn said, people use that money to survive. They don't put the money aside. And then when they have to come and pay tax, they don't have the money.
And at what point do you have to become VAT registered?
after
After a million
You
turnover.
have to. That's it.
And if you don't, there's penalties, right?
Well, I've also heard that I had a case where a guy came to see me and he said his accountant, the first year he had 1.1 million and then he had 3 million and then he had 1 million and then he had 5 million. On the 5 million, SARS automatically registered them, but backwards for 2 years.
Sure.
So they wanted 360,000 Rand that they had calculated from his tax returns.
Back tax of VAT.
Yes.
Yeah. And I mean, just back to the topic, which is that your business and you are separate. I think the reason why we're trying to bring it up is exactly for those things. Like, you know, if you see that money in there, our brains kind of wire like, oh, cool, I've made 100,000 Rand. But that is not all your profits because there is taxes that you have to pay on it. And I think the important thing is just not treating your business as an
piggy bank.
extension of you and speaking to an accountant to, you know, get the right amount out and knowing what expenses you can put
Yeah,
through.
definitely.
Because if you don't have that clearly, you're going to have the shock at the end. Oh, I owe money. What do you mean I owe money?
Yeah.
I didn't know I was loaning it.
The ideal is, I mean, I always tell people to keep a separate bank account for your VAT. So at the end of the month, have a look what your income is, minus your VAT, put in that account, and then see what expenses you have to pay.
You get a
before
tiny
you-
bit of VAT back as well. So if you go and buy a box of paper and it's 20 Rand VAT, you get that back because you
So
offset
on your
it.
purchases, you get your VAT back.
Yes, so
Yeah.
it'll be paper, telephone,
Rental, often.
rental.
And for you, for all the equipment and stuff, you'd get the VAT on that if they were VAT registered.
Yeah.
So we weren't turning over $1 million Rand. We're still not.
Yeah.
But yeah, so we lost out on a whole load of that. Can we back? Can we?
No.
No.
I think the bottom line here is just make sure that you're always clean with SARS. Get hold of Sue rather. Make sure that things are going properly. Let them do the management accounts every month so you know where you stand. And keep everything above board. And there won't be problems with SARS, right?
No.
Absolutely. Thank you
They
so
are
much.
getting, can I say, they are getting stickier and stickier. So
Sure.
proof is on the owner
Yeah.
to prove exactly what you're saying. So yeah, that's the biggest thing is onus on you to prove.
And you need a support person like you to help us with that. That's
Yes.
important.
No tennis player is really good unless they have a coach.
Coach.
Exactly.
Same goes for
Yeah.
business people. Thank you so
Thanks,
much.
Thank
Sue.
you.
Brilliant. Thank you for listening. If you have enjoyed this podcast, would like to subscribe, please visit our website, www.growthfp.co.za. The information we have provided in this podcast is our personal opinion. For more detailed information, please discuss your financial situation with a financial planner.